Again and again, we humans love to make the same mistake, even though we have claimed to learn from them. In the past, we've seen many bubbles form around new technologies that were going to transform the world. Cars, electricity, and the internet all changed the world. But still, we got too excited, created a bubble sustained by hype and greed, and caused a crash in financial markets. And by the looks of it, we are seeing a similar scenario with AI. So, let's look into it. Many companies are adopting AI to improve productivity, while companies like Microsoft, Google, Meta, and Amazon are building the infrastructure needed to run it all. This is costing billions. It is projected that around $248 billion will be spent on AI in 2025 alone. However, we are running into two big problems. First of all, many companies are incredibly overvalued, and the vast majority of companies see no productivity growth from implementing AI in their business. First, let's look at valuations, because according to Vanguard, it's not looking great. Quote, "The cyclically adjusted price-to-earnings ratio of the US market stands at around 32% above our estimate of its fair value. While growth stocks in the broad stock market appear to be overvalued, small capitalizations, value, and non-US stocks appear to be fairly valued. We wondered how fast profits would have to grow to unwind the excess in the US stock market. Assuming a 3-year horizon for a return to fair value, the answer is about 40% per year. This is double the annualized rate of the 1920s, when electricity lit up the nation, not to mention economic output and corporate income statements. Now, aside from Vanguard, there's one model that also shows that the US stock market is very overvalued. I'm of course talking about the Buffett indicator that is at its highest level ever. This indicator compares the value of the stock market to the underlying economy, and it's not looking good. Meanwhile, a growth rate of 40% is massive and very unlikely to happen. We didn't even experience growth like that during the rise of the internet. And at the moment, a graying population, low levels of immigration, and tariffs are slowing down the economy, which isn't helping. But the biggest problem is productivity growth, because according to an MIT study, the vast majority aren't seeing any improvements. Quote, "About 5% of AI pilot programs achieve rapid revenue acceleration. The vast majority stall, delivering little to no measurable impact on P&L. The research, based on 150 interviews with leaders, a survey of 350 employees, and an analysis of 300 public AI deployments, paints a clear divide between success stories and stalled projects." Now, this isn't great news, because this way we will never see the 40% growth we would need for the market valuation to make sense. However, according to MIT, a big problem is implementation. Many companies need to focus more on back-office automation, eliminating business processes, outsourcing, cutting external agency costs, and streamlining operations. And at the moment, many companies are changing their approach. But again, this will take time, and still the chances of hitting that 40% number is going to be tough. However, there's another problem. The big tech companies can't keep spending forever. The vast majority of AI spending is done by big tech companies like Google, Meta, Microsoft, and Amazon. According to Bloomberg data, they account for nearly 40% of Nvidia's revenue. Now, as we all know, these companies are the main drivers for the AI bull run. But they can't keep spending forever, especially if there are no returns. And currently, we can see that the high levels of spending is affecting the balance sheet of these companies. All of these companies are spending a lot, leading to cash reserves going down and debt increasing. Meta's debt even increased so much that it's bigger than their cash holdings. Meta even freezed AI hiring due to the costs surging. Clearly, these companies can't keep spending on AI forever. Now, as soon as they slow down spending and can't produce significant productivity growth, we are in for trouble. And the loss of revenue from these companies will also hit Nvidia, who will see revenue growth slow down as soon as it happens. So at this point, it is important to be cautious when it comes to investing in these companies. We will most likely see the market go down as soon as the AI dream dies down, which is exactly why I hold a portion of my portfolio in cash over on eToro. If you want more information, be sure to check out my eToro account. And don't forget, leave a like and subscribe. It really helps.